Good evening and welcome to Forex Hippie's video on market mapping and how to do it. Before we get into that though, I'll just explain the chart and how we get it set up here. So you can see for yourself, we use a white background. Green bars are the buyer bars, red bars are the seller bars. You have 4 EMAs plotted on here. The blue one is the 20 EMA, red one is 50 EMA, grey one is 100 EMA, and the green one is 200 EMA. Got some indicators at the bottom here: stochastic, RSI, RSI 6, and also average true range we use to work out our stop losses. So what is market mapping? Market mapping is identifying the levels of support and levels of resistance that this particular currency pair has interacted before. Ones that caused it to continue moving in the same direction, ones that have caused it to change direction. Whenever we do this, we also start at the biggest chart, so the monthly chart, and we just highlight to start with the highest points it's ever got to on a monthly basis and the lowest points it's ever got to on a monthly basis. After we put those in there, we then start to look at other areas that it's reacted with. So for example, we can see down at the bottom bit here, got 3 months where it's hit that level there. It's also further along the same month, it's low tested off it a couple of times there. In order for there to be a drawn level, there has to be at least 3 bars that have interacted with it. So in this case, at least 3 months that it's reacted with. I'm going to pause the screen while I put the other lines on this monthly chart. Okay, so that's the lines drawn on the monthly chart. So next we move on to the weekly chart. Now we go to the weekly chart, you'll notice that the lines that we drew on the monthly chart are still there. So what we're looking for is any further levels of support resistant lines that we need to write in. Again, this time we're now looking for at least 3 touches on a weekly basis. So we can see on this line we're just drawing here, there's 1, 2, 3, 4, and then further along another 5, 6. There's several weeks that it's reacted to this level, either by coming up to it, hitting it, coming off it again, coming up to it, hitting it again, hitting it again, hitting it again. And then along here again, it's reacted to that same line. Also at the top here, we can see 1, 2, 3, about 4 weeks in a row that reacted to this line here. And also further along here, it's reacted again there. So let's put that line in. So again, I'm just going to pause the screen here now while I put on the rest of the lines for the weekly chart. Okay, so that's the lines now on for the weekly chart. So next we move to the daily chart. So again, all the lines that we've already drawn on there, that'll already be visible. So what we're looking at is just other lines that we need to be putting in here. Again, we're looking for at least 3 days that reacted to a certain level of support or resistance that need to be drawn on there. So there's a line there that you can see that there's been several days along here and further along where it's reacted to. So let's put that line in. We don't tend to use trend lines much, if at all, at Forex Hippie. A trend line would be a line that you would draw something like this to show a line that is reacted with. Trend lines are extremely objective. Someone might draw it up here, some here. It's really open to interpretation. I've had classes before where I've asked students to write trend lines, and 20 people have drawn 20 different trend lines. So we'll take that trend line off again. So now we have the lines on here, we can see how it could possibly react with it. Lines on their own are no good. What we need is the right bar and the right circumstances to interact with it. So for example, a trade that we took just over a week ago on this Euro CAD was this bar here, this sell bar here. You can see it's reacted to a level of support. So level of support is something supporting it to go upwards. It's also come down off this 50 EMA. So we entered the trade here, had 1, 2, 3, 4, 5, 6 buyer bars. Then we had a high test. So a high test is where it's gone up and come back down again. And you can see it's reacted against this line here. So this line here has become a level of resistance that it's unable to get through. So we moved our stop loss to just underneath this bar here, got taken out of the trade for 251 pips. So hopefully that explains, first of all, how to market map a chart, and then also why to market map a chart. But if you have any queries at all, like any further information, you can always email us at hippie@forexhippie.com. Happy trading!